Hey everyone, this is Kirk here again at OptionAlpha.com, and thanks for checking out this video tutorial. First day of August and also Friday, so the end of the week, had 3 opening trades, and the market again was still very active. I know we didn't make any trades yesterday, and actually thankfully not, because the market just continued to sell off yesterday and then did a little bit of that more today and kind of regained its balance towards the end of the day. So I'm going to go over these 3 trades, but before I do, I want to talk a little bit about LinkedIn, right? Because everyone's been emailing me about LinkedIn. And look, the thing did pop after earnings, so which is good. Or not great for us, but good for the stock, obviously. Had a pretty huge move after earnings, so that does put our position at a full loss right now if we do nothing. Now, of course, we could have obviously sold a put spread below the market ahead of earnings. I know a lot of people said that they did that as well. And I've said before that that was a trade you could obviously make, turn it into an iron condor. But for me, I wanted to kind of roll the dice here with LinkedIn, because a lot of things that had hopefully had or were going to make higher moves after earnings actually ended up not happening. So things like HLF, which we've talked about before, HLF, which is Herbalife, didn't make good moves after earnings. And then again, Monsanto is another classic one that made a huge move after earnings and then has just been crushed ever since. So for us, we've made some good money on a lot of the earnings trades that we've had, SanDisk and Microsoft and Facebook, etc. We've made great earnings trades on those that definitely offset this loss on this one, at least right now, if we do nothing. Now, here's the way that I'm going to look to play an adjustment on LinkedIn heading into next week. So the stock has already made a huge move, and the first thing that we can do, and I'll just take off this strangle trade first, but here's where our position is on the profit loss diagram, right? So this is where LinkedIn's profit potential is, and here's where we're losing money on this trade. Again, very small trade for our portfolio. But the first thing that we can do is sell a credit spread below the market, kind of at 175, 170. So we can do something very similar as far as width of strikes, number of contracts, do that. But you can see here that we only take in a very small credit of about 15 cents. It's not worth doing that trade because you're only taking in about 30 cents in total premium. So reducing the potential loss on this trade from 770 down to 740, it doesn't really give you too much. I mean, it does reduce your loss, but again, doesn't give you too much as far as reduction in buying power. So what I want to do is not do a adjustment that way, since it's so far out of the money. I'm actually going to look at doing just a regular strangle on top of this trade. So I've thrown it up here on the profit loss diagram, and this is what it would look like. It'd be something around the 215, 190 strangle, taking in a credit of around 350. So that helps move out our break-even points another $3.50 on either end. But what it does is it gives us this nice wide base here of a potential area that LinkedIn can move up or down between now and August expiration, which will be about 14 days, 13 days away from expiration by the time we make this trade, possibly on Monday. But that's what I'm looking at here is really forcing LinkedIn to kind of stay in this range after a huge move higher. And obviously, if it does continue lower, then we can make adjustments and kind of work with this strangle. But for right now, doing a very wide strangle on this, if we do this type of a strangle, this is going to add to our margin requirement, but that's why we make trades that are small in size so that we can increase our margin requirement on some trades if needed. Now, if everything goes according to plan in this trade, for example, gets executed right at the same price, then we would reduce our loss from 770 down to 424. So a huge reduction in the loss. We could make this thing a little bit closer, so you could bring it in on both sides. So maybe do the 195 put and the 210 call. You can see you take in much more in credit, but you leave a smaller window of opportunity. So you got to be really selective about where you think LinkedIn is going to go. Now, this would reduce your loss down to 177. So you can see there's a lot of things that we can still do in this position, and we do have time on our side. It's not like we're trading the weeklies. We are in the monthly August options. So we've got a little bit of time here between now and expiration, and really time for LinkedIn to even move lower if it does. A lot of people might be taking profits at this point. People that bought down at 150, 155, and 160 might start to call their brokers and say, you know what, I want to get out of here, and start to take profits right after this earnings pop. We saw it in Monsanto. It's definitely happened before, and it could absolutely happen again. But we're going to look at making an adjustment heading into next week. All right, so as far as other trades, so we did enter 3 new credit spreads today. The reason that we did credit spreads is because the market was great. Implied volatility has finally started to spike, so we're going to start adding some premium, and you can see we did some pretty decent sizes here with some pretty wide strikes. So we're definitely using up a little bit of our capital here, and we'll continue to add to these positions and positions like it as we get into next week. But as implied volatility continues to be high, we want to take advantage of that by putting on a lot of short premium. So selling a lot of option spreads that take advantage of a drop in implied volatility over the next month or so. So all of these trades are September trades, and you can see that we're pretty much trading, at least with SPY, very neutral. So with SPY, we did a put vertical spread. With IWM, we did a call vertical spread. That helps us stay a little bit neutral to the market movements. Again, we still have the Qs that are working in our favor as far as a debit put spread that are still making money as the stock or as the markets continue to fall down here. So the first one that we want to look at, obviously, is the VIX. Now, the VIX is one that we've traded before in the past, and we usually like to trade the VIX always to the downside. So we don't like betting on implied volatility going higher, but we'd rather actually bet that implied volatility at some point actually drops back down. So with the VIX today, what we did is sold the 17.19 call spread and took in a credit of about 32 cents. So that moves our break-even point out to 17.32 on the VIX. And really what we're trying to do here is take advantage of possibly a move down in the VIX and let these things completely expire worthless. So this is a look at the VIX, and you can see that over the last year or so, there's been very, very few instances where the VIX has gotten this high. So we're going to say, you know what, at some point between now and September, which is all the way out here, not even August expiration, which is right here, the VIX is going to trade below 17.32. And I think it's a pretty good bet. I like the bet. It's very, very conservative. By doing the credit spread and selling options instead of buying a debit spread, we allow these things just to expire worthless. We don't have to enter a contract to get back out of them, and that's the ideal situation, is that they drop very, very low and we get out of either one side or both sides and they just expire worthless. For SPY, very, very similar setup. We went with the 182, 179 debit put spread for about a 40-cent credit. Now, this is a very low credit for the width of the strikes, but it's a very conservative trade. This is a $3 width strike trade, so it's $3 wide between 182 and 179. And we're only taking in 40 cents, but it's a very, very conservative trade. It's very far out of the money. And I'll show you guys that here in a second on the trade tab. So here's a look at SPY. Had a really, really tough day early on, but kind of ended in decision. The key here being that implied volatility is up at the 62nd percentile. And you'll notice how far out of the money our strikes are. So our first strike at 182 is all the way down here. So we'd have to see a pretty dramatic drop in stocks between now and September for our strike to be hit. Again, risk-defined trade. So this trade will not lose any more money than we've already kind of put out there right now as far as margin. It's capped, so if the market does just continue to crash, we only lose what we've already put out there as far as margin requirement on this trade. But I like the trade. It's a very high probability trade. I'll go to the trade tab here so you guys can take a look at that. And there's our position in SPY down below. You can see we already went out to September, so 49 days. And let me just go ahead and open up all of these strikes for you guys. Okay, so here's our trade in SPY. You can see that first strike here is at 182. Now that probability is about 76% that SPY stays above and closes above 182. So that probability is right here. There's about a 76.43% chance that the SPY stays above 182. That's a very high probability trade. It's about a 76% chance that we're going to be winners on this trade. I like those odds a lot and therefore made a little bit more of an aggressive trade as far as margin requirement and portfolio allocation. The last trade, very similar to SPY, except on the other side of the market. So we did IWM, did the 117, 119 call spread. You'll notice that for IWM, the premiums were just a little bit better. We did a $2 wide spread and took in almost the same credit as the SPY, except that we only did a $2 spread. So this credit was a little bit more juicy than the SPY as far as premium goes. Same type of thing going on with IWM as SPY. We wanted to get really far out of the money. Implied volatility was very high for IWM. You notice again up here at 61 percentile. So we did the 117, 119. That puts kind of our line in the sand up here at 117. We have to see a pretty good rally right back up to that price point between now and September expiration, which we could have. I mean, it's done it before in the past. It's not to say that IWM is a slow mover by any means, but it is much more of a trend mover. So as it starts heading down, it's going to take a lot to stop this thing moving down. And I'm betting that at some point it's going to do something like it's done before in the past, where it just takes a little bit of time to kind of regain its strength and form a base before moving higher. And if that happens, that'll take us all the way through September, and it won't even have a chance to get back up at our strikes. But we may be out well before that if implied volatility drops. Going to the trade tab, you guys can see exactly where this position is. This one's already in the money, about another $22 or so. But you'll notice our position, our first strike out here at 117 has got about an 83% chance of expiring worthless. So that's a really, really high probability trade, much higher probability trade than SPY, but we wanted to actually give ourselves a little bit more room to the downside on SPY. Came in a little bit closer, and although it's a higher probability trade for IWM, price-wise, it's a little bit closer than it is for SPY, because IWM is a much quicker moving ETF index, so it could rally and jump much quicker than the SPY. Still, you notice that we're trading on both sides of the market. So we have some positions below the market, have some positions above the market. This gives us an opportunity at any time in the next week and a half here to kind of close out one of these trades depending on which side the market goes. And obviously if it continues to move sideways to down, that's going to be just fine for our positions. So as always, hope you guys really enjoy these videos. If you have any comments or questions, please add them right below this video. I'll get back to all of those tonight or tomorrow before the open, and happy trading.